Welcome, Maverick Traders. Continuing on with our ThinkorSwim Lab series. This is Joe with you here once again. We want to talk about the ThinkBack today. I want to get specific on how I use ThinkBack. There are many ways to use this type of software. I use it as an analytical tool. I like to analyze what would have been the best bang for the buck over a specific time frame. Now, guys, it's cool because it gives you a big snapshot of whatever chart you want to pull up. You'll sit here in a minute, 5 years. So I know where the stock turns and where it doesn't. But that's not what it's for. I like to get a specific time frame, maybe a month or so, throw on 2 or 3 different types of combos and see which one would have worked over a specific scenario. Now, how that helps me is when I come into the scenario, say a year or two down the road, I have reference. I can reference that saying, okay, last time I saw a super volatile break to the upside, I found out through my analyzing it in the past with ThinkBack that the vertical spread does much better than the diagonal or even sometimes the straight call, right? Because volatility can really squish it if it crushes out of it. So, long story short, I just kind of wanted to give you that breakdown. There is simulator trading. You can simulator trade on this. I find it pretty difficult. I find that there's better simulator software out there, which is forward progression, meaning you put on a trade, you hit the next button, it gives you a new day, and you can't see it until you hit that button. So I find that to be a little bit more realistic when it comes to emotions and reaction and management of simulator trading. But it doesn't mean you can't. Other traders like to backtest with it. It's 5-year chart you're going to see here in a second and all the data points with those options chains that come with it. To have some sort of a Bollinger Band strategy or a secondary indicator strategy, you can put that right on the chart and just visually look to see when it doesn't work. So there's many things you can do with this software. However, I'm just going to give you a quick overview of ThinkBack and the way I navigate it, how I analyze options behavior and how we can look at it. It's really cool. And then comparing multiple types of combos against each other. Now, whether you're learning options for the first time or you're an expert, it's a really handy software to know. So let's just jump right in. Okay, the first thing we want to do when we're in our software is get to the ThinkBack tab, and it's located up here under Analyze. If you guys want to see my cursor, I'll circle it up there. Analyze will give you options, chains, things to look at, risk graphs, all sorts of cool stuff. We are going to move all the way over here to ThinkBack. You can see this little clock, some sort of interesting little clock. And once you click on that, now we can put in anything we want up top. I'm going to go ahead and just type in Microsoft. I was doing a little bit of research before the class started, folks. And I saw that Microsoft had a pretty cool consolidation area. You can see I've already zoomed in on it. Let me go ahead and just repeat that process just in case. So this is what it's going to look like when you first get there. It gives you a whole 5 years worth of data. It's actually really neat. You just left click, hold, drag to zoom in. And I think I zoomed in from here all the way about to that breakout. And what I was looking for, folks, is right around the 5th, or the 8th, I should say, of October. I thought that was pretty interesting because I had a resistance. I had a support level, and I was like, hey, what if I was to compare an iron condor, staying with inside support and resistance, or a butterfly spread right at where it is today? Now, you could see that obviously I'm going to do this basically 30, 40 days out, pretty much October's expiration, or November, I should say, expiration. So it's probably going to expire here. So I can already tell you the butterfly is going to be the best. It's the best bang for the buck. But more importantly, I just want you to realize that you can analyze how these things behave, because as I go to November, because when you're sitting through a butterfly and you see that it goes back and forth, it's very difficult to swallow, even though that you have the ability to price this for max gain, or max loss, I should say. The condor is a little bit easier to swallow. That's not so true when it gets higher up towards the condor's legs, and then it really panics people. Understand the butterfly is going to have a very high reward to very low risk, and a condor is going to have a very low reward to high risk. However, the condor has a super high probability. I figured they'd be kind of fun to start with. So let's first off build the iron condor, and you can see that I went ahead and put in the date of where I wanted to start, and it gave me the options chains of that point moving forward. So these are the options chains that were available on the 8th of October 2020. So it's pretty cool. Roll down, I'm looking probably, let's see, 43 days out. I don't like to go much 30 days, more than 30 days, for 2 reasons. That's my time frame. That's kind of where I like to trade anyways. and it also gives it a fair shake when you're trying to compare. It would be more apples to apples than it is to apples to onions. So it keeps it kind of fair. So let's just go ahead and zoom in. And I'm going to select some of the strike prices here. I can see there's resistance up here at about 230, we'll call it. I've got support down here at about 200. So let's do, let's see, a 230, 240, 200, 190 iron condor. What do you guys think? Oh, let's try it. So what's really cool about this is if you just click on the bid or the ask, it'll actually populate it. You can click on the bid, it'll sell the the option. You click on the ask, it will buy it. Now, what's also really cool is if you hit down control, it will compile them together. I'll show you here. So let's start with, since I'm on the put side, I'm going to go ahead and we're going to sell that 200. So let's find 200 here, and I'm going to go over the bid and click it, and then you can see it's going to sell it. Now, what it does is it zooms in. And I'll fix this in a minute because it's going to zoom into the expiration cycle of the option that I selected. So first off, let's go ahead and just put the 190 in here. I'm going to buy that bad boy. I'm going to hold control, hit buy. And once again, you can't see it because I've squished it down. So let me expand the chart. You're going to get good at doing this, by the way, folks. You'll see. Stretching things up and down. There we go. So we've built the first leg. This is our vertical. Now let's go ahead to the call side and let's do the vertical put. Let's do the vertical call. And the upper side, what did we say here? 230, 240. So I'm going to go ahead and sell the 230. I got to hit control first, right? And then I'm going down to the 240 and I hit control and I'm going to buy this. Now notice, once I do this, ThinkorSwim knows that I am trying to do an iron condor, so they changed it for me nicely. It was kind of neat. Now I like to put down the quantity, other way, to 1. And it just makes it really easy to analyze, math purposes, stuff like that. Obviously, you're going to position size this based on your risk tolerance and your account size. Now, what this did is it zoomed itself all the way out, but you can see all these little scribbly lines. This is where I want to be. So I'm just going to left-click hold and drag it back out through the range that we're looking at. And it'll zoom in nice and tight for me. So I'm going to have to squeeze this down. There we go. And I'm just playing in the margins, right? The up, down arrow, side to side. I could actually, increase. I'll just squeeze it up here. So what's cool about this is on the left you have actually the P&L for the combo. And that's what's so neat about this. I could just put my mouse over here and just kind of play on this line and visually take a look to the left. I'd be up 180 something dollars. Here we're up, 223, so on and so forth. And this is where it expires. It goes flatline. And it looks like we would have made 100% gain. Well, of course we would. It stayed well between there. What's really interesting about this is you can see the behavior. Now, as this really started to fall, you thought that this would climb further, but it didn't. And the reason being is because it was approaching the lower half of our spread. It wasn't hurting us. Now, folks, we didn't even get into the negative at all. You can see this is the zero line. Negative would be below. I could actually shrink this down even further if you want to see some of those negative values. You could see we were never really hurting. But it didn't really climb much because this was falling so fast. And I'm not here to teach how the spread works. I just want you to know this is how you can analyze it. If you wanted to up and down the P&L, you'd have to switch it here. Right here, this is the date. You'd click day by day by day. But what I don't like about it is it shrinks this right back into this range where I can't see the full view of the chart. So instead of just going day by day, I'll just put my cursor over there, take a look at the left, and know that that's how much I'd be making on those days. Now, when this started to gap up, look at the money just kind of come in because it was running out of time, and it was moving back away more towards the neutral part of the combo. So this started safe, it ended safe, it was really sweet. It's a spread of $10, right? $10 on either side, and it was $4.32 credit. So we were actually risking, $5.68 roughly. So not too bad, not too bad. It was just over 1-to-1, which is actually pretty good for a condor. So we got that. You write down the information you want. It's all great. And so let's go ahead and I could close the whole thing, which I like to do, start fresh after I write it down. You could actually just deselect it and leave it here if you choose to do that as well. So I'm just going to move straight into the butterfly. Now the butterfly, let me zoom back in on this guy. The butterfly, I think we wanted to do 230 and let's do the 200, but a butterfly's cut in the middle. And since the stock was pretty much at 215, well, right here it says it's at 210 today. Let's just go ahead and do a 215 butterfly. So 230, 215, 200, call butterfly. And you'll see how this reacts. Got to find these strike prices. So the first thing I want to do is sell the 215. So I'm just going to click that. I'm just going to get it because we got to sell twice as many. We're going to buy the 200. Hit control, and then we're going to go down here and sell the 230, I believe. Was it? Let's go down. Yes, 230. Ooh, there it is. Oh, no, buy. Control, click. All right, so we got the 230, 215, 200. So this is a $15 spread, whereas the Condor, I believe, was a $10 spread, even though the midpoints were $30 apart. So this should have a much greater reward to risk. I'm just going to add a couple of here to make it a butterfly. Let's keep here because I need to sell 20. And then I'm going to switch it down to 1 because you guys know how I roll. So go to custom. It'll allow me to select butterfly now because I got the numbers correct. And now I just drop the whole thing down to a 1x2x1. Just for math. It makes things much easier. All right, and I got to zoom back in because whenever you start to play with this, it likes to squish the chart down, doesn't it? So let me squeeze this down a little bit. Oh, wow. Okay. Wow. I don't think I can squeeze it that much. Yeah, substantially bigger. Okay, so when we knew the butterfly was going to come in almost perfectly. And the reason being is because the stock, on expiration was very, very close to 215. But in this case, it was very similar to the Condor. However, it actually did drop into the negative twice, right at the beginning and then right as it started to fall. But what ended up happening, it started really decaying, just like the Iron Condor did. And then when it came back to the neutral, this is a much steeper climb, a much steeper slope on the butterfly, and it came in a lot faster. So long story short, we knew both would win. However, the butterfly had $3.47 risk, because it's a full debit, to make the difference of that $15. And the max on that would have been 690 something. Well, it's over here, because it did get its max, or close to it. So it's basically $15 minus your debit, which is $345.7, where the Condor was actually risking more than it was going to make, but it was still a good $4. So overall, of course, the butterfly was better because it was at the money and the risk reward was there. However, we didn't have the flexibility that the Condor did. So I know that's just kind of comparing two different types of graphs together, but play with this, guys. Get out there, mess with it. It's actually really cool. These are just two that I do a lot, or a lot of targeted butterflies, things of that nature, and some condors. But you can do it with vertical spreads, straight calls, puts. It's a real fun little gizmo. All right, guys, just want to spend a couple minutes breaking this down with you. Get out there, play with it, and we'll talk to you next time. Thanks for joining me. Bye, everyone.